This is the wrap-up for the live market open for Wednesday, March 23rd. Markets are still affected by the Brussels bombings. News coming out regarding the manhunt still have an impact. The biggest effect yesterday, and I think also today, is on the pound. This raises the chances of a Brexit because of its the perceived connection of the bombings with immigration, or the perceived incompetence of the European authorities, in the eyes of some Brits, to deal with terrorism. Anyway, the pound has the biggest negative impact. US primaries were quite mixed. Currently, no effect on markets. What did affect markets is a few more relatively hawkish comments from Fed officials, in contrast to the dovishness seen last week. Most importantly, from Charlie Evans, usually a dove, now going hawkish, open to rate hikes, and Harker, which is a hawk, and the name also sounds a bit similar, would like the Fed to get on with it. Anyway, this is positive for the US dollar, of course. In terms of data yesterday, we had mixed surveys. The most important one from Germany, IFO, was better than expected. No market impact because it coincided with the breaking news from Brussels. UK inflation added to the misery of the pound with the miss at 0.3. The US market manufacturing PMI came out as expected. The Canadian budget is quite stimulative, more or less as expected, should leave the Bank of Canada on hold. That means it's positive in the medium term for the Canadian dollar. Okay, if we look at the charts, let's begin with euro dollar. It's still pressure to the downside, mostly because of the strength of the US dollar and a bit because of the impact of Brussels, including the impact that Europe could suffer a Brexit. Anyway, we reached a low of 111.80, grinding down, very, very slow move. 112.15 is still some kind of resistance, but not as strong as it used to be. Lower support is 110.70. Pound dollar dropped quite a lot, fell to a low of 141.62. Further support 141.25, and then 140.50 and 140. On the top side, we have 142.40 and 142.40 and 143.65. Let's erase this line. Dollar yen recovering, breaking back above 112.20 on the strength of the US dollar, and yesterday it attracted safe haven flows, but not anymore. Dollar CAD, Canadian dollar, now showing some strength, but basically well within the range, supported by the budget of the Canadian government. 130, the round number, is support, resistance at 131.70. Sorry, the Australian dollar now bouncing within the range, relatively resilient, not losing too much ground. Yesterday it did suffer a bit, but rising. 76.80 resistance, 75.60 support. Kiwi dollar, in comparison to others, it's suffering more. 67 is support, 68.20 is resistance. What do we have today on the agenda? Let's talk about this at the wrap-up as well. Very quiet morning in terms of indicators or planned events, but we have a speech from Jens Weidmann of the Bundesbank at 20 to 1 GMT. At 1 GMT, we have a speech from James Bullard of the Fed. He's a known bull, he's a known hawk, so he might be upbeat, and that shouldn't impact markets because it will not be news. The most important release today is at 2 GMT, US new home sales. A small advance is expected, but we had a disappointment earlier this week from the existing home sales. Also, Belgian business climate might have some minor impact on the euro. Crude oil inventories and also distillate oil inventories, gasoline inventories, could impact the Canadian dollar and also the market mood. Currently, oil is on high ground in comparison to what we've seen just in the middle of February. And for those trading the Kiwi, New Zealand trade balance that surprised with the surplus is going to move the Kiwi at night. Okay. So thank you very much, everybody, for coming, for the great questions. And yeah, stay safe wherever you are. Safe day in the markets as well. We'll be here tomorrow. Tomorrow is a busier day. And yeah, that's it. So thank you all, and bye-bye.